All right. Welcome to the public live stream. Just a quick question: did you guys hear this elevator music, or did just I hear that? I'm gonna announce starting real quick. Okay, just to be sure, can you guys hear me? Is the sound quality all right? Is there anything with the stream? It should also be okay. Sound is good. That's great. Did you hear the music? Just no, you didn't. Okay, I thought this is maybe like then for everybody. Okay, good to know. All right, let's start right away. I will talk a little bit about the market and my current view, and then you will have all the time to ask questions and similar stuff. Really quick to crypto, BTC front run to level a bit. I'm in with a little scaling order, not the size I wanted to, but I'm still in. We are losing this trend now here. Time will tell if we get a bigger retest or not. But anyway, slightly exposed. I was talking about this in the macro update as well, that the ETH BTC pair was breaking out here, and we even closed the day above this like trend line. I look a lot at these trend lines on stocks, and they were kind of great. And crypto trend lines are not that great all the time. Let's frame it like that. But we broke out, we dived below again. So not on ETH dominance. But still, should we make higher highs here, the high here becomes very likely, and this means maybe another all-time high or back to the highs for ETH. But as long as this keeps grinding down, I see no reason to see this as bullish or somewhat. And as said, trend line seems to fail. I'm not trading the trend line anyway, but it's a nice indication sometimes of a trend change. And obviously the horizontals here need to be taken out as well, and we haven't seen that yet, and so it's technically still a downtrend. FOMC today, so I expect some kind of volatility, lower time frame noise. Not gonna trade this anyway, but over the next days the real move will probably unfold. And so much to crypto. As said, nothing has changed since my Major Monday video. Real quick, a little bit with the market situation. Nobody talks about this, but we have an interest rate decision also for Japan, and the yen carry trade is, in my view, not off the table. And the last time the Bank of Japan increased rates was in 2007. Wasn't the most bullish year into 2008, and now we had even lower interest rate. We had even negative interest rates. Now we are hiking again since 2024. Puts pressure on the system. Many people use this free money glitch, taking like basically the free money from Japan and buying, for example, US assets or other assets with that. And we had a similar unwinding in 2008, and now the interest rates have been lower for longer. Should they increase or just keep the rate steady, this could add a lot of pressure to the system. Time will tell. Not saying this is going to happen for sure, but another big confluence factor to that, and I don't know if you've seen the post or the update, the major update on Monday. Oh, I need to use the browser version because my trading view is not working, and I don't know why, to be honest, but we will figure out. Yeah, the yen is here. Could also be the yuan, but I think, to be honest, this is they mean the yen, but also, as said, time will tell, level by level. It's a nice thesis, it's a nice theory, but I'm not going to bet the farm on all of this. We have a global planet, we have the yen, we have an arrow pointing down, and this arrow actually was similar in September. We had this white arrow down, could mean another rate cut, very likely US rate cut. But this red arrow, we will see. And the yen. And so I looked at the yen strength index, and we are basically ranging here. The yen is in a downtrend since 2008, and if you look at the interest rates, it's no wonder, right? Because They basically gave people free yen over a decade. And so the interesting is going to be to see what the Japanese Federal Bank does. I don't think they will raise rates because odds are or forecasts are they don't. And usually at the US interest rate decision, it's usually right, the forecast. So I'm not gonna doubt that. I don't have data for Japan, but we will see. I think it's on Thursday. And then the question remains: will we break this to the upside or to the downside? Will this trend continue, or will we break this to the upside? And here there could be a great opportunity to put some money into the yen instead of the euro or the dollar, because an outperformance of the yen will probably be nice against many other currencies. We will see, time will tell, level by level. And as said, it's going to be interesting to see if the Bank of Japan is going to raise or keep it steady. I think the forecast is for keeping it steady. And so I'm not going to doubt that, as said. But as said before, in 2007 into 2008, they also hiked first and then they kept it steady. And I mean, it's not even high, right? There are 0.5% interest rates, but it adds pressure onto the system simply because people are taking this free money and put it into assets to get some returns. And once they hike the rates, the risk of doing that increases. And if you, for example, took some loans and you put it into risk assets where you never know what's going to happen next. So it could also go down, right? If you buy American stocks, they could also go down. And now with interest rate payments, you also have the pressure from this side that you don't not only like have a negative return maybe, but also like paying interest rates. And I mean, this is like the federal interest rate. Usually if you go to, as a private person, if you go to a bank, you don't get the 0.5, you get a little more. And so the risk grows bigger if they keep on like keeping it steady or even hiking further on. And as said, there's no guarantee that they're going to keep the interest rate as low as that. So I think there is a hidden risk which almost nobody seems to talk about, and the economist clock, in my view, was this regarding this pretty obvious. And so we will see. It's going to be an interesting week with FOMC and all the stuff we have this week. So much to macro crypto. I wanted to quickly show a little stock trade. I also shared this publicly. First time I talked about this was here. Hydrogen, interesting narrative, but it's never about the narrative, right? We don't marry ideas. It's pretty much like in crypto, but it's a little better tradable in my view. It's a little more predictable. And ever since my first entry, I added here a little bit, so my average is not that low, but it did incredibly well. I TP'd publicly on the way up, 70% into this, earlier already 20%. So I got rid of a lot of it, and I recently added back today also a little bit at the higher time from 0.5 from down here. We have already a nice reaction from here. Time will tell if this is going to play as I expect it to be playing. And I mean, even to this high here, it's already 52%. And I mean, look at this volatility. There are so many inefficiencies in those kind of stocks. And I mean, the volume is not even like low. It's not a penny stock. It has 44 million or 45 million shares traded at a price of around $3. So it's good volume. The volume increased significantly all throughout this area. And this stock has potential in my view. But it's, as said, it's similar as in crypto. You don't marry ideas, you don't marry your bag or anything. You see how much I sold of this simply because the SPX lost structure, this lost structure, a lot of stuff to look at. But I think those are so nice to trade because they're so full of inefficiencies. And as said, not a penny stock. They move like really ugly, but on like significant volume, 30 to 50 million in dollars is usually something very nice to trade. I've also shared this one publicly, maybe gets invalidated soon. I did not get stopped out, I think by 2 cents or something. So sometimes you're lucky, sometimes you win. And here we are breaking the trend right now. I TP'd already here and here. Oh no, I didn't. This was just projective. I thought yesterday will hit. Seems so it won't hit. It loses structure here. I have my stop trailed up here. As said, similar, not marrying the idea, not marrying the bag, taking the money, and leaving. Yeah, and I have many others of those. A lot of them also share publicly, which is another one. I did this one with the members today or over the last weeks. Nice little 30% pullback. You will see that a lot in those volatile stocks. And this kind of behavior reminded me a lot of a similar stock I've traded, a nuclear stock. And here's same similar story. Nice 3-hour trade. I could have scaled a little lower, but there's no need for perfection. I'm here for making money, not to be perfect. And yeah, but also here, maybe showing a little bit of risk here. Once those like momentums, like those trend lines and the momentum fades, those can nuke quite aggressive, right? We have like a 42 overall 62% candle in 12 hours. So these are no joke, right? I mean, even though this one is actually also in a little lower volume, actually it's also 40 million, even a little bit more. And now I'm long for maybe filling this gap on the daily. You will see maybe going up to the 0.5. Minor idea, obviously high risk play, but and I just want to wake everybody up. If you plan to trade those, don't think just because it's a company there is like real value or something. There might be in the future. There might be already. There might be. It might be a profitable company, a good idea, whatever. Don't marry the idea. It's similar story as in crypto. Stocks are nothing else but fundraising on steroids, and so make your money, make your gain, make your profit, and then leave. As said, they have a lot of potential. Should it go back to like those higher time frame supply levels to the 0.5, those trades they can turn out to be something like huge. But you see how locally I lock in gains, and this is basically also how you should trade crypto. And those charts, they can be tempting to say, yeah, we're just at the beginning of the move. Like, let's push this trade a little bit higher. But you need to be very disciplined. And I think this is pretty much the easiest market I've ever traded. But you need the discipline, right? You have like the loss of this trend line here. I TP'd 70%, and then it knew 60%. So it's all about discipline. It's always the same, right? You can kind of the best strategy. You need also obviously you need to follow it, and you need to understand the risk. And so, yeah, discipline for those very important stuff. Yeah, and other than that, I mean, the stock market is surprising me, to be honest. It's just became more vertical, but I think this is simply because below of top reasons. Once this got lost, I also posted in my written updates that I'm short. I got stopped on this short, too bad, but this is why I manage risk. And then we just ripped higher. And as said, I'm very surprised about that. Similar than like this trend, I'm looking at this one now. The steeper it gets, the less sustainable it is. And I treat those majors, stock majors and everything, I treat them basically as like I would treat them a crypto major. So once this starts breaking down, once this is topping, there is no reason for me to be in these crazy, volatile, dangerous stocks anymore. And so once this trend shifts here, I'm probably going to be short again. Wouldn't it be poetic if we like top it 69? Wouldn't be surprised, but I mean it's not crypto, but it would definitely be funny. Yeah, so trend change here, momentum break here, and I'm gonna flip short. And other than that, I think I'm pretty much done with my little rant. Be careful in crypto. So as said, I'd say this is not looking too bullish here. Like here, those absorption wicks, and now we're breaking this trend again. Yeah, just be careful, manage your risk, and don't trade your bias. Prices can go up, prices can go down. You can make money either way. So trade the levels, and we are sitting at resistance, and we're rejecting from resistance until proven otherwise. So I'm short. I'm playing on very wide invalidation for a very simple reason. What the fuck? Oh no, go away. For a very almost very simple reason. Let's use this one. Because we're at higher time frame premium, right? And at higher time frame premium, I favor, as a swing trader, I favor short. Simply because it's like written on the chart. You want to go long here, you want to be a seller here. And even though I could take a stop, if I don't take a stop and my short plays out to be like the right choice, this position could pay me for the next month to come. So I play them on size because I see them up here as more optimal. I want to be a seller at above 100k BTC. Simple as that. And this is also why I play this one a bit wider, because I see it as a swing trade. I mean, it's 6%, and looking at this intra range here, you might think, wow, this is a huge stop loss. This is like crazy and stuff. But just imagine going long down here, and you have a like 17% stop loss. Would you really be that bothered about a 17% stop loss buying BTC below 20k? I guess not. And just because we are shorting doesn't really mean I need to play in sub 1% stop losses if I want to build swing positions, right? Rather, and this is what I always recommend, rather a little bit wider on a higher win rate, because it's, first of all, it's a lot more fun to trade if you have a higher win rate. And from a psychological perspective, it's also way easier to handle the strategy. Everybody seems to aim for very high R and you need to at least 5R or whatever. And of course, if you can handle it, like you will on 5R ideas or on 10R ideas, you will just get stopped more often. But obviously, one trade can pay it all back. But who has the time and who has the mental capacity or the mindset to handle like 5-6 losses in a row, still sticking to the strategy? So as said, I'm usually always for aiming for a higher win rate, especially as beginner. And simple as that. As said, I see this here as very optimal to be short. And if I'm wrong, I pay a few percent back. If I'm right, I make a lot more percent. Simple as that. Okay. I think this was my little rant about the market. Not much has changed. I guess we will see the second half of the week will probably be a little more interesting. Now with FOMC, I think also the China meeting between like Trump and Jinping is. But yeah, stay prepared and you can ask your questions now. Given that the stock market closes on the weekends and on Monday stocks open with gaps, do you leave your trades open on Friday? Yeah, sure. I mean, I'm a swing trader, and if I would always close my positions on Friday, I would always like, so for example, look, wrong category. For example, this one. I mean, I'm in this trade since 16 days, so 2 weeks. If I always close it on Friday just because like there's a risk of a gap, yeah, not gonna be a swing trader then. So this is also a reason why playing it a little bit wider, you see it's also a 10% stop loss, but it's also a 30% gain, so it's a 3R idea still. And if it goes higher, I can trail it even further. But at the same time, I don't need to like fear. Look at those gaps. You see some of them, like some of them are, the wider ones are maybe 5%, and they don't like happen all the time. You might have also more aggressive ones, but usually not at demand. So what happens here is that it's just like the move gets overextended, and obviously the first sell-off then is quite aggressive. You have also gaps to the upside. I mean, the more volatile the stock is, the more gaps you will have. But for example, this gap happened on Friday to Monday, or did it? Like this is Monday to Tuesday. This happened from Friday to Monday. Yeah, I mean, if you go along here, you probably get smashed quite aggressive. But what I also do here, I play with soft stops. So I don't always, like if I play a little lower time frame, mid time frame, I usually have my fixed hard stops. But if I play them like this, I usually use a soft stop. But you need to consider I do this full time. So I look at the chart. I can look at the chart basically on every time of the day besides when I'm asleep. And so I get my alarms and I can manage my position manually all the time. If this is not the case for you, if you, for example, you can't look at your phone or your computer or whatever during the day, I would use hard stops, definitely. But ever since I started stocks, like in Q1 this year, I've never been like completely gapped out. and paid way more than I expected. I have also, for example, on the SPX, my invalidation was very close above this high, and we closed here on Fridays, or on, was it Friday? Yeah, and then I was out of my position, and then it gapped up on Monday. This would have been an ugly, like I would have probably doubled my stop loss, or at least like another percent on top. This would have not been nice, but in this case I was stopped out, and in this case I got my invalidation already on Friday. So as said, I think I shared my statistics lately, and it was since 3 months I took 60 trades, and I had the situation not a single time. So I don't think the risk is that big, but it's definitely to be considered. Yeah. Which broker do you use for stocks? I use Interactive Brokers. I tried a few. I think all of those new brokers are shit because most assets you can't trade, or at least there's always a downside. And Interactive Brokers is probably the one with the best user interface and the professionals one with like all the instrument. I have never found a single instrument not on Interactive Brokers. So if it's like on TradingView and if I've found this stock and if it's not the biggest garbage in the universe, it will be on IB. And like the range of instruments and the range of like flexibility you have how to manage your positions. Also with the margin account, you get a 2x leverage on your whole account. You can even short stocks, so you don't need to buy CFDs because CFDs are oftentimes unregulated. You don't really know who's behind them, or some leveraged ETF garbage, short ETF 5x blah. You don't really know what's in the basket and who's managing it and how they're managing it. Oftentimes they behave kind of weird, so you can simply go for this one stock for the company and you can sell it because Interactive Brokers is borrowing it for you. You sell it and you can like buy it back from Interactive Brokers once the price went down, which is, as said, from everything I've tried so far, I'm most happy with IB. What do you consider signs of weakness and signs of strength in trading crypto or stocks? I mean, this is definitely a sign of strength, though. First of all, a sign of strength and or a sign of weakness is usually then like a confirmation of trend or a shift in trend. So you can use those trend lines. Should the trend line break down here, for example, or like also sideways, getting eaten up, the momentum shifts, and I would consider it as a sign of weakness. Similar story. If you, for example, this here, we broke it down, we closed below, was a sign of weakness. But obviously we just went higher, which is then a sign of strength, right? A close above this high is a sign of strength. And you can apply this to every single chart. We can also look at crypto for that real quick. So as I said before, that we have broken this trend line with the absorption up here. This is, for me, this is a sign of weakness, right? We broke the trend, we closed below this swing low, and we retested it, supply and resistance, support and resistance rule. We retested it from below. Sign of weakness, several signs of weakness here. Also, if you look at the bigger picture in this range, we have the big wick here, which is actually, for me, it's a sign of strength because it was a big absorption down here, up here, towards up here. But now we closed, even though it's behind the wick, we closed a full body below this low. And I said in my updates that this is still the key low for me. I ignore the wick. If we close below this low, this is a sign of weakness, and we have seen the sign of weakness. Now we're reacting from those supply levels again. All in all, many signs of weakness. Doesn't mean we need to go to 60k from here, but it shifts probabilities definitely a little more into a bearish outlook for me, at least. Also here, sign of weakness, swing failure pattern at the highs. Yeah, so sign of weakness, sign of strength can be many things, but I think overall I explained a lot of concepts I'm using, and so I think it should make sense for now. Thanks for the overall view regarding BTC. We have tapped on the 3-day hidden order block to EQ, but not on the 1-day hidden order block. An entry at 116k, below 618 fips, and stop loss at 705. What would be your thinking if getting in on that one, the hidden order block for stop loss? Yeah, as I said before, I played very wide, So probably most people who see this think like I'm crazy. But I play always I play my plays always like that. I usually enter on a very wide stop loss, and if I get confirmation within my level, I can still like tighten it, and also adding to this play. But in this case, because I see this level as most optimal for being short, like this whole area on the chart is a good area to sell. And so I'm playing it wider because I want to increase my win rate on those plays, and I want to keep on adding to my shorts up here. Um, and at the same time, if the level just fails, I can still cut for only half a stop loss once we take out this, and I see no signs of weakness, just going higher and higher, higher. I might as well cut my position here, and then I still pay only a 3% stop loss, right? I'm flexible in my position management. I don't need to have rigid rules like, oh, it's there and I need to wait for it. No, I'm intuitive trader. I'm very fluid in my execution. And this for stop loss placement asset, I usually tell people play your plays a little bit wider, give them more room. Don't aim for crazy high R because high R means lower win rate. And so most people can't handle that. Also from a time perspective, if you still work a day job, you don't want to play those plays so tight. You want to give them room, time to adjust, not getting wigged out, thinking about should I re-enter? Oh no, I have no time to look at my phone and all that. I think it's just, for most people, it's just way more convenient to play a little bit wider. And if you get more confident and all that, or have execution tactics, you can still tighten or play them tighter in the future. But this is how I do it. This is not necessarily the right way to do it. You said you had the 705 included. I would definitely, if I want to play this tight, I would definitely include like the whole FEG, which means here the FEG is closed at this point, the daily one. Also the 3-day. So I would definitely, the red line here for me is also my soft invalidation point for this idea. And I would definitely include it into my stop. So this would be my minimum. And obviously, if we go into this level, we have some smaller levels up here. I usually scale into the level, so my entry will also be a little bit higher, usually later. But right now I'm on very low size only because I entered here on the front run and I'm at 0.2% or something. Swing size, but still not what I wanted. But obviously trading is just not perfect. Do you trade Forex, mate? No, not really. I hold my cash holdings in different like currencies simply because they are also volatile and they travel. And I lived in a lot of countries already, and I'm looking to not lose global buying power with my current currency. So I simply hold one which looks good. This is also what I show with the Japanese yen. Should the Japanese yen gaining strength against other currencies, for example, because the Bank of Japan is like increasing rates, Japanese people hold more of their currency in yen, trading more Japanese assets, which are also traded in yen then, meaning the yen might get more strength because it has a bigger use case. So depending on what the devs are doing, the Japanese yen might have a great future, but right now I'm holding, for example, money in dollar and euro and in Georgian lari because I live in Georgia. Obviously, I need lari for my day-to-day stuff. And this is how I trade forex, but not on the chart, not like with a prop firm or anything like that. It's not my market. I like volatile assets. This is why I go for those aggressive stocks most of the time because I like inefficiencies. And I just think the forex market is such an efficient market, and this is not really what I like trading, to be honest. How much leverage do you use? Interesting question. We can use this. So it wasn't useless after all. I did this with the white belt course because a mentee had a question as well. Simple example. We have an account size, for example, from $100,000. It doesn't really matter. You can go for 1,000, for 10,000, for 100,000, and you will always just add zeros to your absolute values. And for example, you want to risk 1% per trade, which is then $1,000 per trade, right? So in this case, your leverage and everything else will be defined by the wideness of your stop loss. Because if your stop loss is 30%, you can obviously not size as big as if your stop loss is, for example, just 2%, like in this example. And this means our position size is predefined. If we want to risk $1,000 on a 2% stop loss, our position size is going to be 50K. Simple as that, because 50K, 2% are $1,000. So if you buy for $50,000 and price moves 2% against you, you lose $1,000. In the end, it's about position size, right? It's not about margin. And we come to that. You have return of equity should not be higher as 50%. This is very important, or return of investment. This is more or less your margin. Equity is your margin. And it should not be higher than 50%. If you, for example, trade TradFi, most of the time leverage is predefined and it's never that high. But still keep an eye on that. And on crypto, you can increase up to whatever, 500x. But you shouldn't be able to lose more than 50% of your margin. And you can set up, I have made a post about that. You can check out the study area, position management. There is a post of me where you can, like how you set up your exchange and your trades to see the return of equity. And then you will see how much. And then, for example, if the stop loss is 2%, I can only use 25x leverage. Simply because 2% x 25 means 50%. If I, for example, go for a 50% stop loss, 50% leverage on a 2% stop loss, this means I lose all of my margin. And there are traders who trade completely with margin and they do that, but the rule of thumb, and also Money Tower shared this before, is not more than 50%, simply because the higher your leverage is, the more likely on a quick move you can get liquidated. And so a 25x leverage is actually already kind of high. And if you exit by 2, you get 50% of your margin. And if the move is very quick, you have a flashback or whatever, the likelihood that you pay more than your $1,000 risk is not given, because your margin on a 25% leverage is $2,000. So on 25x leverage, you can use with a $2,000 margin, you get a $50,000 position. Makes sense, right? But the problem is, the higher the leverage is and the quicker the move is against you, your stop might not get triggered, and so you pay more than your $1,000 risk. And with the 50% return of equity, you make sure that it's considerable safe for the high leverage. And so you increase your likelihood of not paying more than your $1,000 risk. Simple as that. It's a safety feature for volatility. So you define your leverage by the wideness of your stop loss. If your stop loss is 1%, you can go for 50x leverage. If your stop loss is 5%, you only go for 10x leverage. As simple as that. I hope that made sense. Actually, kind of nice that I left this. If your position moved in your favor after entry but did not reach TP1, goes back to your entry, would you recommend stopping the trade or allowing second, third touch to key level? Yeah, this depends on like the level. I mean, if it's the most optimal level, you have a lot of confluences and all that. So for example, I shared this. There is no single answer to this question. I'm sorry for that, but I can show you an example. And we have this Credo trade here, and I actually moved my stop loss to break even. But as I said, I trade those oftentimes with soft stop loss. So I wait for a kind of reaction, and I'm not, if I like pay a few dollars because it goes here and I cut my trade here, it's still around break even for me, especially considering because I took a TP here. So I have seen the structure many times before, and especially like the most prominent one was Oklo. Can also share that. A lot of things come down to experience. You see, we have the 30% drop. We have this a lot of times, and then we have this consolidation. I entered here in this little gap. In this case, price just went up, or it bounced immediately. It nuked back down, but I didn't cut it because I was very convinced of this level, and I had pretty much a similar structure and a similar idea on this trade. It was pretty much the same, only happening slower. So I entered here, it bounced up, it came back, and now it went to the range high. Let's see if it like continues and goes even higher like Oklo. And this was just experience, like not being overreactive down here, but you have many different situations and there is no answer that fits it all. So be flexible and just gain experience. What's more important in my view then, if it doesn't reach your TP1, happens. If the level is not strong, if it's lower time frame, if it's just like some random level, rather manage your risk too early than too late, right? So there is nothing lost with just taking this break-even stop loss. If you feel confident in this level, it's the most optimal level, it's higher time frame and stuff, you can allow more touches. It's a general rule of thumb. And best case, it will reach your TP1 because you can read the signs once it reverses. So for example, in this case, if we only go to here right before the purple box and I see this lower time frame wise shifting against me, I can still decide to TP here. But there are a lot of things that are just for just get better with experience. Yeah, so in this case, it was experience. I had it at soft. And if you trade like lower time frame, if you trade crypto on higher leverage and all that, because this is spot, this is also very simple because I can't get liquidated and all that. Rather too early, rather be safe than sorry, is a general rule of thumb. And if you like, if you're still in the learning phase, it's not about making money anyway. It's about collecting experience. And if you like, if you have a break-even trade, it's basically a winner because you gained experience while not paying anything for that. So as said, rather be safe than sorry in the beginning. Trading fees in IB are pretty much the same as we trade in crypto, or any differences? Not the same, but they're actually very low. So I've not checked how much fees I paid. I think in 3 months it was okay, the amount I paid. It's more than in crypto, definitely, but it all comes down to how you enter and how many trades you take. But they are not like crazy high. I also tried some, they are always charging like $15 or something for every single entry. And if you want to scale in, yeah, this is kind of annoying. I mean, obviously, if you play on size, doesn't really matter too much, but if I can pay less, it's obviously more nice. And so an IB is actually kind of attractive. If PA enters a key low, I guess, you are waiting for candle closes for confirmation, but PA reacts at the key low first, and when the candle closes outside the key level, sorry, how would you enter? For example, the first wick into BTCs one day, 3 times key level, the daily candle close below outside the key level. How would you enter at the close, or risk a wider stop loss or something else, assuming there would be no retest? Yeah, for that, I usually then look at lower time frames, which is something I do not recommend if you don't feel like already ready for it, because it can simply confuse you. But for example, I don't trade lower time frame, but I use lower time frame for execution on higher time frame levels. And we had this pump here, and then we touched the level slightly, and once I saw the reaction here, I entered. So my average is somewhere here, but as said on scaling size, my biggest order was here, or is still here. And then I saw this, and then I thought like, okay, this might be a 3 drive. And I thought, I use a lot of trend lines for that. Oops. I thought like, okay, should we like bounce from this trend line and go for the 3rd drive? I have an entry here. We lost this one, went back to this, bounce from here. I thought maybe we will exceed this high. We didn't. So I didn't got filled on more size. And on the daily close, I haven't checked the daily close. In this case, like, this is why waiting for closes in my playbook not like existent. Makes no sense to me, especially on higher time frame, because you will see a lot of stuff like that, and you don't want to enter this level down here. Doesn't make any sense to me. That's why it can be helpful if you're ready for that to look at lower time frame structure, but you don't trade the low time frame structure. So don't forget that. You don't like trade on those levels here. You still trade the same level, and you just try to get more and more hints for a potential like not a spike in your level or not. So I thought we have this 3rd drive, but we didn't. And so I did not enter, but you could then decide here to enter like with a local invalidation and stuff like that. Sometimes I do that, but this is already also like more or less a little bit of lower time frame trading. So if you don't feel comfortable with that, don't do that. but this can work kind of well. We have a similar pattern up here. For the swing failure patterns, it's actually, my view, essential if you want to trade them to look at lower time frame. And also simple trend line here. We have one drive, third drive. I entered here, I entered a lower time frame trade as well. TP'd here, got stopped on the other one at break even. And I saw a lot of shorts opening into this, and I thought like, okay, probably they're going to take it out before, and then I want to enter on the third drive up here, not getting stopped on my swing position. And so this also didn't happen. So it did not go as high as I expected. And then we broke this trend line, and I started entering here. I added more here, and I added most size here. You see the red line, it's my entry basically, and I have my stop above those highs, trading the higher time frame idea with, oops, where are we? Trading the higher time frame idea with lower time frame confirmation execution strategy. And especially as said for swing failure patterns, it's kind of essential in my view. Mind sharing you trading the watch list? Yeah, sure, why not? Why not? Shared it with the members already. How is this? Where was that? Am I blind? I share list. Here we go. Send it into the chat. I don't know if it gets updated or if it's just the current one then. But these are like, are you looking for this one, right? So I didn't even ask. do you want this one or do you want another one? Stocks one. Yeah, this is the narrative-based stocks. So I have them in categories: quantum computing, genomic biotech, fat loss, muscle grow mats, vertical farming, flying cars, anti-aging, AI, robotics. So I think it makes most sense to categorize stocks into narratives, and I also like have certain narratives I believe in for the future. Not saying that this means the stock needs to go ballistic, but it makes sense to put them into narratives, because you will see if you look at this watch list that certain narratives usually pump together. And also, for example, the water, like the hydrogen stuff, pumps together usually. The quantum computing stuff pumps together. And it's not like in crypto that once the stock market, like all stocks go up, all stocks go down, which annoys me in crypto, to be honest. This is why I went to stocks, because then you have certain sectors outperforming, going up, going down. You can hedge them easily by just going into another sector. And if you're diversified in stocks and not just buying crap, you will see that there's always one going up, not like in crypto where everything dumps at once. Thank you. Another question: if you enter a trade but it does not show strength and close inside your key level, is it in your opinion better to close the trade for a small loss or wait to hit your stop loss and move in your favor? I said, for example, do those cuts sometimes, but be aware. Is it this one? Oh, yeah. So for example, this is the red line is my soft invalidation, which would mean 0.5 R then, right? Roundabout. And there I could consider, like, if I see no signs of weakness in this whole area here, no signs of weakness, just going higher, I might as well cut the full trade here, or I cut 50% of this trade. Reducing my risk simply because the trade is not playing out like I expected. But you need to consider, you need some kind of experience for that, and you won't believe how many trades I fumbled for gaining this experience. So if you have a most optimal level, and if you don't feel like very safe already or secure in like your low time frame or execution strategy, just accept the risk and just leave it like it is. Obviously, if you want to learn the skill, you need to dive into need to jump into the cold water and give it a try. And you will fumble some, you will figure out sometimes it works great, sometimes it doesn't. And obviously, after a while, you will gain some consistency, and then it can be a very, very valuable skill, because I think in position management, the real magic happens, to be honest. Is there a reason why I don't scalp and only use low time frame for entries on high time frame level? There's a very simple reason, because I started trading to gain more time and more freedom, and not the other way around. So I did a lot of scalping as well, and I had my scalping sessions where I took like 250 trades in just a few weeks. But I also figured, like, first of all, it's highly stressful and it's very time consuming. And I did not quit my job and became a trader to then stare at the screen 10 hours a day, being stressed out for a performance that was okay. I had, like, when I started scalping, obviously I didn't make shit, but on my latest scalping sessions, I then like found that I could make money, but it was also very easy to pay it all back with a few losses in a row and all of that stuff. And then suddenly I figured, why trading lower time frame levels on their own? Because they have a low win rate, right? So why not trading higher time frame levels on lower time frame? And so this is when I really started then to improve my position management, my execution strategies. You can also find all of that with real examples, which I took live with the group in the study area. For example, in ETH, I had a very big win here on this first like touch of this daily level, or not the first, but this, or was it this high? Sadly I can't go to such low time frames, but there was like, you will find it in the study area anyway. There was such a big like wick and absorption wick, sorry. And I usually enter my trades, as said, I have usually one a little wider, and I think I was filled on this one, and I have my stop above this high. And to the range low, it's not a very sexy trade, but it's still like being exposed, right? Having exposure, being, especially because I was very long altcoins and I want to have a hedge or something. So I shorted this, and then at the same time I entered up in this wick here on the 1 minute. As said, you will find it in the study area with a very local close invalidation. And this is, in my view, where the magic then happens. If you have the time, if you have the nerves and the skill, where you make like of one trade, of one higher time frame idea, huge amounts of money simply by, in the end, taking profits at the range low. So this was one of my biggest wins, because I was in a big one, I was in a small one. I even added here, also seeable in the study area. So I added more or less to this idea that ETH is going down from here a bit. I added 3 ideas on different time frames, and it added up like, I don't remember percentage wise. I think it was 12 or 13% for basically one trade idea. And then it went higher again. I missed this one because I was too zoomed in, and obviously also because I was kind of on the limit, because I was trading so much lower time frame. This was an area where I think it was really like 250 trades within a very short period of time. My fiance was not here, so I was pretty much locked in all the time. But it drains you after a while, and I was so zoomed in that I forgot the swing failure pattern here. It went lower, and then the spot back started printing again. And so with lower time frame execution, you can add greatly to higher time frame ideas. And this is, in my view, so this is my strategy to use it. I'm not saying you shouldn't trade lower time frame, but I'm always aware of my goals, and my goals are to create a life of freedom, to create a life of joy, of time, to spend with my loved ones and all that, and not to stare at the screen 10 hours a day. And I also, to all scalpers I talked, I mean, some are consistently profitable, obviously, but I've never heard a number bigger than 5% per month, and I can do this with swing trading stock easily. I mean, this year was special for stocks, right? Everything went parabolic, but I did 60% in 3 months. No way that scalping could hold with that, especially if I compare time performance wise. And while it's not looking exciting, I can't like share 10 charts a day. I maybe share 5 a week, but in the end it's about performance for me, monthly performance, time to performance ratio. And from this perspective, scalping sucks in my view. And so this is the reason, yeah. And if I have the time, and if I have the patience, and if I have like the moves of trading lower time frame, I do it in higher time frame levels. For example, I could then decide, should price to, for example, let's imagine, it's a hypothetical scenario, but let's imagine we got the third drive here, and I enter on my big swing position. I could then also enter, you see the stop loss. If I look at this time frame, obviously the stop loss looks ginormous. And if I only want a TP down here, this is not even 1 hour, but as said, this is a higher time frame idea. And then I could, if I want to, add on lower time frame here if I get third drive absorption signs, or even wait for this kind of breakdown here and enter here on the shoulder, somewhat like that. And then obviously my RR could be insane already to this low down here or to those. And I can then TP this locally. This is, for example, what I did with ETH in the study area, this example, TPing it locally, making it profitable. So I don't need to touch the swing trade. I can remove the risk of the swing trade. I made already some money for the week, for the month, and then I can still like hold my swing trade with patience. So I think, in my view, this is one of the best approaches to trade lower time frame. Do you use any other software apart from TradingView, order book, and volumes? I did a lot, especially like if I want when I did this low time frame stuff. Then I used ExoCharts. I use a lot of Velo data. Also for higher time frame, Velo is even for free. ExoCharts cost something for 6 months. I think it's $200 or something. But I only use it really. I only mostly use order flow if I'm scalping or if I do my lower time frame stuff, which is not that often lately. And so I don't use it very often. I have like a weekly check, or if we approach the level, I have a check on Velo charts for funding rate. And I also look a lot on in volume, because for absorptions, for example, I can give you example on plug here. If I go to the 8 hour, you see how big this wick is. So we have volume approaching into those highs, and then volume is slowly fading. The volume bars are way cleaner on stocks, by the way, because you don't have like 10 different, you have 10 different exchanges, but Nasdaq usually on US stocks works best, and you have like the most volume there. And in crypto, a lot of the volume is wash trading. You have 5 different exchanges. Who knows if the data they provide is even real or whatever. It's crypto, not regulated. Stocks are manipulated too, but not in the same way as crypto. And so the whole order flow volume data is a lot more reliable. And once I saw this, we had a pre-market pump of 20%. I decided to go for this 25% TP. Those were here and here, I think. And so here, massive absorption, more than average volume. Also here, you see the big wick, the big shade at the top, big volume, and small body, big absorption at the highs, big absorption at the highs. And obviously the other way around as well. If I see big absorption at the lows, then I see it as bullish. Also examples to find in the study area. For someone who trades crypto but never traded TradFi, what should I know before making the switch? Yeah, I find if you want to trade stocks, I find breaker blocks are not working that well. I just trade simple supply and demand. Premium discount stuff works way better in my view. Sometimes hidden stuff works as well, but overall I see a way higher win rate with simple supply and demand rules. This is mainly what I can tell you about stocks. I know not so much about forex. As I said, I don't like trading forex because it's mainly a raging market, not a lot of volatility like I like it, not a lot of inefficiencies like I like it. So can't tell you a lot about that. What's also very important, if you trade TradFi, you have opening times. Don't forget them. Make sure you have a broker which allows you to trade those pre and after market hours, because a lot of the important moves happen in pre-market sometimes. So make sure you can trade them. This is why I don't like the neo broker shit, because you always need, or FTMO, because you always need to wait for the opening. On FTMO, even 5 minutes more, and the most important move usually happen pre or around the opening, and then you sit there, stare at your screen, can't do nothing about it. Yeah, I hate stuff like that. So have a good tool at your fingertips is, in my view, very important. And also make sure if you set up stop losses and stuff, usually the standard setting is valid till like day, so it will just expire after 1 day. or after this day when you like set it up. So make it good till cancelled. This is very important because if you ever wonder why your stop losses are gone or your orders are gone in TradFi, it's usually because it's not good till cancelled. This is important because you don't have this in crypto. Yeah, I'm trying to find what works best, but like you said, looking at the charts all day drains me. So I'm looking more high time frame trades only. Plus high time frame should have made better reliability to hold and work. I think as well. But you need more patience for that. And obviously, if you want to, if you can, and if you want to, and if you have the time and the nerves and all that, trading lower time frame can increase your learning curve by 10x. But what I see a lot in people is that they very quickly lose track of this goal and think like, oh yeah, if I just risk a little more and this and that, and then I can make more money and blah blah blah. People usually lose sight of their main goals in low time frame because the noise is very high. And then the next thing is, most people have to work, most people have to have obligations, have family, have stuff they have to attend to, and then it's only a stress factor because you get alarm here and there, and oh no, I couldn't like handle it properly, and then you're angry, and this, like, all of those things you do from the beginning are basically building up emotions or baggage, emotional baggage. And if you from the beginning like do the wrong things or build these tense emotions because, oh, I couldn't enter properly because I had to be at family dinner and blah blah blah, all of those things will add up and will stack on top of each other, and they will not help you in the future. So try to do the right thing from the beginning, acquire the right habits, and aim for, like, if your goal is to have as much time as possible, there's really no reason why you need to spend a lot of time at lower time frame. As I said, you can add to those ideas greatly with lower time frame in my view, and you can improve your understanding, but you don't need them. And I see so many people so busy with like looking for every single mid time frame breaker block instead of then zooming out and having like this macro picture of like what's happening next. And if you look at, for example, at Money Tower, I think one of the biggest parts of his edge is his ability to predict the future, more or less. And how did he get that? Obviously by not looking at the 1 minute chart, but by zooming out, looking at the macro picture, connecting the dots, collecting hints, putting it all together. And I think people spend way too less time with all of that and are way too focused with doing something all the time, executing many trades, the thrill and the betting and all this stuff. And I think people are way too distracted with all of that instead of focusing on the macro picture a little more. But obviously this is also my personal preference, so I'm not here to tell you you need to do this or that. It's just that most people I talk to wanna trade to have more time for other things, more money, more freedom, more time with their loved ones, whatever. Lower time frame is, in my view, not the right way to get to all of those goals. And if you, as I said, spend most of your time with like chasing these things and not working on your higher time frame game, I think you're not working towards your goals if these are your goals, like for example they are for me. Do you only trade prop accounts or only own capital and mixed? Also, if I may ask, how many hour a month is realistic when trading with 1% risk? 1 hour. How many months, years learning did you need to get there? Thank you very much. Best regards from a German living on Mallorca. Liebe Grüße. I have a prop firm account. I have an FTMO account. I have it actually since almost a year, and I made some, I lost some. Right now I'm break even, and I trade this account, but it annoys me most of the time. So then I forget it again, and then I paid a lot of my gains back because I had the wrong lot size, because they changed the lot size on gold or on silver or something. All kinds of stuff, which is just like more stepping stones in the way, and I have enough capital to live with my own capital, so this is not a big priority of mine. But obviously it would be nice to have another account on this size. So I trade basically a mix, but I'm mainly focused on my own capital because I can take this money and pay my rent and buy my food and do my stuff, which I can't on the prop firm account. And so I'm not very driven on the prop firm account. But obviously I have it. I bought, I paid for it. It's still running. Master round trip are there. So I'm gonna keep on playing it, obviously. But I also just play high time frame with this one. how many hour a month realistic per 1% 1 hour. So you can also measure it in percent. I would measure the performance always in percent. So let's imagine you have a 10K account. 1% risk is then $100. And so if you risk $100 per trade, let me frame this differently. So from a percent, just think in percent. From a percentage perspective, you need to consider that the biggest hedge funds or the biggest funds in the world, people like professionals investing money for other people, they make around 10% on average. Why? Because they only invest in stocks that usually don't short really. Like those investment funds, at least. I mean, a hedge fund obviously does, but those investment funds, and they are achieving 10% per month on average simply because they're more or less just buying index funds. And so this, I mean, over a long period of time, you should at least aim for 10% a year, not a month, sorry, a year. If you can't even exceed that, you're doing something wrong as a trader. So if you can't exceed that now, obviously you can get better and better, but until then, a good chunk of your capital should still be in those at the right time. Because for example, if you bought the S&P in April, you're up 40%. If you bought Doge in April, you're up 0%. So as said, I would still have a good chunk of my money in those higher time frame plays, like those easy money plays, investments. And you use like 30% or whatever feels comfortable, or 20% or 40% for trading. And in trading, a realistic target, in my view, per year is, so you need to consider that most of the best traders, like the documented ones with real numbers, with real proof, they achieve around 100% or a bit more per year. And 100% doesn't sound really much, but if you like compound it over 10 years or something, it's actually a shit ton of money. And so think realistic, and a 100% a year are an average 12% a month. And if the elite traders in this world, like the ones with documented track records, achieving 12% a month, as beginner trader, it's probably wise to aim a little bit lower. Or you aim for, so for example, I aim for 10% a month, and in many months I just exceeded, or like since the summer I basically exceeded every month with my stock trading. But I know this is not like your everyday year, your every year. So I'm realistic. I aim for 10%, and from a trading perspective, if I average it all out, it's probably somewhat around that, because I had also some negative months. I had some very good months the last 3 months, but an average probably 10% is what's realistic this year, what I made per month on average. If 10% is already stressing you out, you can also aim for 5%. It's also a great performance. Who can, like, with a proven track record and like repeatable, right? Not just like a one-hit wonder, but repeatable proof that they made 50% a year. It's a crazy performance. As I said, professionals like managing funds for other people, they pay even money for that. They don't exceed 10% a year. And if you can achieve 50%, it's a good performance. And so whatever, I like to aim for the stars. This is what I said. I mean, I exceeded the stars a few months in a row, but 10% a month is a great goal in my view. And obviously if you risk 1%, this means 10 hour per month, but I would still measure it in percent. And this is also a very important number you need to think about, because if your account is pretty small and you aim to quit your job to trade, and you only have like $1,000 to your name, and you can like make 10% a month consistently, which is a great performance, you still won't be able to live with that in most countries, at least. And so have realistic targets. Not many people are so vocal about, but if you, for example, read the what's called the market wizards, there are many of the greatest traders from the previous century, and they are all like 100% in average. And as said, I'm talking about average. Obviously, you maybe exceeded in some years, you maybe like underscore in some years, but we're talking about a consistent average over years. So yeah. Is the session recorded? It is. I'm gonna upload it to YouTube. Can you give a brief overview of what supply and demand is? Yeah, you can find it in the study channel, like Foss said, but a very simple, quick overview. I have to leave actually in a few minutes because I need to prepare for the white belt. But obviously, if you look at this, whales sold aggressive. So you can look at this as supply. Then you can refine the supply down to, for example, this order block. But all of this is supply. And if you want to have a crypto example, and this is what people oftentimes don't get, they're so busy with refining that they don't get the most obvious supply area, which is in this case here. And you see we exceeded it, we swing failure pattern it, whatever. Oops, we closed above. But all of this is supply. Also on a local level, we can see that every time like the chart nukes aggressive, like from this point here, we have a little consolidation here, and look at this nuke. So in this point where it started to unload, and then they aggressively market sold into this. So this is basically your supply, and everything you do within this supply is just a refinement, right? This is why, as said, I like to keep my levels a little bit wider, because I cover oftentimes the whole area instead of just this little refined area. And you can then still enter the refined area on lower time frame if you wish, if you have the time and all that, but you're still exposed with the whales, because as said, this is included in my stop loss, simply because I think even if we exceed this will probably create a nice reaction, and then I can still decide if I get signs of strength again. I can still decide to get out at break even. I can still manage this position very fluently and all that. And if I want to take a trade within here, I could also refine it down then on several time frames within here. But this whole area is supply. And also on a higher time frame level, don't overcomplicate it. You don't always need to find the tricky odd time frame kind of stuff. The simple stuff oftentimes works as well. This is supply, simply because price was sold off from here aggressively. Look, price exceeded, swing failure pattern and all that. It's still not, I'm not saying it's easy to trade, but if you define more of an area instead of just like, oh, there's an order block, I need to enter there, but rather the whole area here, you see also here, we consolidated here. Why? Because consolidation, big sell-off, and the bigger the sell-off, the more aggressive whales sold. Also ETH, perfect example. You see, we exceeded this supply and we went up to this one, like here, aggressive sell-off, little consolidation, aggressive sell-off, and we did it again and we did it again until we didn't. But what did we now? Now we are at this all-time high supply. And what did we do from here? We just sold off. And so if you always look for the perfect refinement, you might miss the bigger picture. And I see so many people missing the bigger picture. And so, as said, big areas. Also here, we have many refined areas in here, but this whole block here is demand. And you won't really care if you bought here and here and here and here and scaling into this trade and being in the end somewhat exposed from here. Once price does this, you don't really care. You don't need always to have the most refined entry, tricky hidden stuff or whatever. Keep it simple sometimes, especially on higher time frame. You want to be on higher time frame discount, you want to be a buyer. At higher time frame premium, you want to be a seller. And as for said, if you're more interested in supply and demand, look in the study area. I made more examples also with nicer charts. I don't have the time to make it all fancy right now, but I hope you got it so far. Thanks for the answer. 10% a month sounds insanely good. Yeah, and it is. And if you can see it as that, because many people are like, oh, 10% a month, how should I live from that? Obviously, if the portfolio is small, it won't feel like much, but think about compounding. Like there are calculators out there, equity calculators, which you can use to, like if you have a 10K account, put in 10% a month and just calculate what this means in 5 years, in 10 years, in 20 years. You will be a millionaire. It's percent, it's exponential, it's compounding. And this is like, it's not fancy, it doesn't sound like, wow, 10x or whatever, but it's like consistent and sustainable. Do you use a crypto wallet for receiving payment for the courses membership? I'm directed to CB. Yes, unfortunately, I only have crypto right now, and it's a pain in the ass. I know with WAP and blah, it really grinds my gears. But the problem is in Georgia, the bank account has no SEPA access. I can make international transactions and all that, but if I want to connect it to WAP, which uses Stripe, I can't because it needs a SEPA access. I haven't got that, so I open a company in a different country and I'm doing the fucking KYC since summer, and it's still taking time. So they wanted all the documents, need 3 weeks until they're there, and blah blah. So to not bore you, I only have crypto right now, unfortunately, and it's with Coinbase, but you can connect other wallets as well, and this takes up to 2 hours to validate. Yeah, unfortunately, the only solution right now, um, which I come up with. I'm always one. I'm the one always staring at the chart and grinding in live time from should zoom out more. You're not alone. You're not alone, and as said, also on social media, if you it always seems like something needs to be going on. It needs to be like happening, and you need to take trades all the time. And it seems like the more trades you take, the more profitable you are. But in reality, it's often the opposite. And get rid of the urge to always do something, and get rid of the urge of thrill. It doesn't need to be like exciting or whatever. Trading is most of the time is boring, and sometimes it's exciting and a lot of stuff is going on, but a lot of it is also just like studying and collecting data and information and being patient. And yeah, so for example, a good exercise is to just like zoom out, don't go below the weekly, and look at historic charts, look at the SPX, look at the Dow Jones, do some analysis on higher time frame. Look what the market look. The market is around for 150 years, and if you go for the Dow Jones, you can see all the data until 1898, I think, or something. This is fun in my view. I mean, might sound crazy, but I think it's fun. You see the history of the markets and how like the market is nothing else but the print of human psychology, more or less. And it's so interesting to see that even for 100 years ago, stuff was all like the market was what it always was. It was a market. It was human psychology. And if you look at historic data, and if you compare this to news and the system and all of those things, it's actually, first of all, it's shocking because things seem to repeat, insanely accurate, probably because those systems always worked and they just keep on repeating them, because why would they need to come up with something else if they have a system running? And so this is actually it sounds probably a little bit autistic, but I find this exciting, like studying the history. If this is not the case for you, this is probably then your C game. Because if this is not coming easy for you, not coming simple for you, for example, the first like months, 4 months or something, the only thing I did in markets was studying old historic behavior. And I still do that, and I still enjoy that, and collecting data and all that. If this is not the case, if you're a different personality, because we're all different, it might come harder for you, but then it's your C game, and you can still work on that, and you obviously are aware of that. So put in some time there as well, because the easy money plays are in higher time frame. All right, guys. If you have some quick questions, you can. I see someone is typing still. If you're quick, we can answer this as well. Other than that, I'm gonna wrap this stream up, because I said I need to prepare. And thank you guys for joining in. These streams are, by the way, monthly, so I'm gonna do them around the first, depending on what's happening during the week and how I have time and stuff. But I have planned to do them monthly, so make sure to join in next month as well. Nom, thanks. I just wanted to avoid CB. Is it possible to forward your wallet and I will pay with Cust card? You can like you can now. The problem is if I don't do it with WAP, I have problems with the roles, because then you see on WAP they manage my roles here on the Discord server. So this means you have the role for 3 months and then you have it not anymore. And if I do this all manually, I'm gonna be. So I would be very, very happy if you could just like connect your MetaMask, or there's different wallets available. You don't need to use Coinbase. You can just connect some kind of wallet, and send it then. Because I said I would do it for you, but if everybody does it or everybody asks for it, I'm gonna go crazy. This is too much spreadsheet for me then. Some outlook. Starting with 10K, doing a 5% a month, after 5 years, your account would be approximately 168K if you consistently earn 5% per month, which is with profits compound monthly. Keep grinding, guys. Exactly. So do the math, understand like the real math behind it, the real statistics, and then you can play the real game. Other than that, thanks guys for joining in. I wish you all a great week ahead. Stay ready for FOMC, be prepared, enjoy your week. Bye bye.